Good morning and good afternoon to all of you. I am pleased to welcome you to the opening of this important digital conference dedicated to inclusive insurance in the Central and Eastern Europe and the Trans-Caucasian region, which is happening today and tomorrow. My name is Klime Popovski. I'm professor in insurance at the University of St. Clement Ohridski, Macedonia, and former president of the Insurance Supervisory Authority. I will be the master of ceremony. Let me start by thanking Gorazd Čibej, managing director and the Insurance Supervision Agency from Slovenia, and IAIS regional coordinator for the CEET region. Hannah Grant, head of the Secretariat Access to Insurance Initiative, Dirk Reinhard, vice chair of Munich Re Foundation, and Katharine, Pulvermacher, executive director of MicroinsuranceNetwork. We are very pleased to organize this digital conference in collaboration with such a valuable partner and look forward to our continued partnership. The conference is designed in 4 sessions, 16 outstanding speakers who will touch the most excited and challenging topics in the light of the inclusive insurance market development, such as the current landscape of the inclusive insurance in the CEET region and its future perspective, climate risk and agriculture solutions as emerging topics for the region. Furthermore, designing and implementing digital insurance solutions for the low-income, excluded or underserved, supported by favorable regulatory framework. Finally, understanding and meeting the needs of customers lie in the heart of every successful effort to reach scale in the CEET insurance market. Ladies and gentlemen, before inviting the organizers of the conference to deliver a welcome address, I would like to express my deepest hope that you will take the advantage of this opportunity to come up with valuable insights and motivation that will be beneficial to the further development of the insurance industry in the CEET region. Last but not least, thank you to all of you who accept the invitation to attend the conference, and we are happy to see an extraordinary number of registered participants. Now, I will hand over to the host and looking forward to the welcome remarks. Gorazd, over to you.
Thank you, Klime. I will just give a short welcome speech to all the participants. Dear colleagues, in my capacity as a regional coordinator of the CEET region within IAIS, which consists of 31 countries, I would like to welcome you to our first ever digital conference on the challenges and opportunities of inclusive insurance in the CEET region. The event will last for 2 days, and it is a joint project between 4 institutions, namely the Insurance Supervision Agency of Slovenia, which I represent, Munich Re Foundation, AtoI as an implementing partner of IAIS, and MicroinsuranceNetwork. Each of the 4 sessions will be hosted by these 4 institutions, which guarantees that participants can profit from their extensive expertise and their different perspective. We have been working hard over the last couple of months to put this program together. It will give you participants the possibility to get a thorough insight into the state of the market of inclusive insurance in the CEET region, and hopefully start a fiery debate about what else can be done in the future to further promote inclusive insurance. We will also explore the potential and opportunities that inclusive insurance brings, not only to the consumers, but also to the insurance industry and society as a whole. I am very pleased to see so many participants joining us here today. More than 270 participants from 72 countries is a proof in itself how important this topic is to the CEET region and beyond. Among our participants, there are those of you who deal with insurance, inclusive insurance as practitioners, policy decision makers, supervisors, and industry representatives, and those simply interested in this topic. And all combined, I hope this will make our discussions very interactive and multidimensional. Inclusive insurance is an important risk management tool for emerging consumers. Before entering the market, it is crucial that potential and new players understand the concept of the inclusive insurance in the emerging market in order to provide quality insurance products. The crucial role insurance plays as a tool to achieve development goals goes beyond financial sector development. The other development agendas considered may include, for example, social protection, food security, agriculture, rural and urban development, gender equality, and women's economic empowerment, micro and small medium enterprise development, and last but not least, climate change. And this all will be tackled today and tomorrow. The protection of people and assets is a key component of sustainable development. In the absence of any formal protection mechanism, when faced by risk events, low-income people typically rely for recovery on informal coping mechanisms. Essentially, self-insurance, such as asking family members or friends for help, taking loans, selling assets, not investing in education, or simply depleting savings. As such, insurance is as a risk mitigation strategy, allows low-income and middle-income people as well as governments to protect and build on their existing assets. Without effective insurance, it is unlikely that sustainable development is ever truly achievable. Insurance is a risk protection mechanism. This mechanism can arguably support sustainable development through providing access to justice for all and building effective, accountable, and inclusive institutions at all levels. When speaking of inclusive insurance, we all need to know precisely the typical inclusive insurance customers profile, which is low education level and low insurance awareness, low level of disposable income, difficulties in reaching customers, a lack of trust in insurance providers, and the negative perception of insurance. Hence, it is our duty as supervisors and as industry not to forget this segment of underprivileged society that is so vulnerable in mis-selling, to reduce value of products and customer abuse. By means of more education and further inclusion, we can make a step forward to a better society. I hope that by the end of this event, participants will be able to better understand the following four concepts. Firstly, what is inclusive insurance, its potential, its types of products, and different models used to deliver inclusive insurance. Understand the characteristics and needs of emerging consumers and how good insurance products can address such needs. And identify success factors and challenges in marketing inclusive insurance viable for providers. And finally, to understand the relationship between client value and viability. Lastly, I would like to thank all the organizers of this event for making this happen and doing an excellent job in attracting top speakers and panelists who will share their knowledge and expertise to make advancement and promotion of inclusive insurance in the CEET region, especially for the benefit of the society and people in need. I wish you all a pleasant, exciting, and innovative 2 days for discussions that will hopefully generate new ideas and greatly enrich the pool of knowledge on inclusive insurance. Thank you for attending, and I look forward to hearing your inputs during our panel discussions.
Thank you, Gorazd. And now over to Hannah.
Thank you, Klimek. Thank you, Gorazd. And good afternoon, good morning, everyone. So on behalf of the Access to Insurance Initiative, I'm delighted to welcome you to this conference on inclusive insurance in Central and Eastern Europe and Pan-Caucasia. This is actually the second time that I've participated in a conference on inclusive insurance sort of in the region. The first time was in Ljubljana, actually under the leadership of Sergej Simoniti, who was at that time the head of the Slovenian Insurance Authority, which was actually back in 2017. And it's great to see the Slovenian authority, AZN, now under Gorazd Čibej, continuing to take leadership on the topic for the region. I'd also like to thank our other partners for their support in organising this event. So Munich Re Foundation, MicroinsuranceNetwork, and Klime Popovski from the University of St. Clement Ohridski. The Access to Insurance Initiative, or AtoI, is the IAIS's implementation partner on financial inclusion, and we work with insurance supervisors globally to help them put in place an enabling environment for financial inclusion. In this context, I'm very pleased to see supervisors from across the region participating in the conference today. And I'm also happy to extend invitations to the AtoI's trainings and events, or just get in touch if you have any questions on inclusive insurance. I'm also delighted to be able to announce the publication of a new AtoI paper developed with support of AZN on inclusive insurance regulatory landscape in the CEET region. And my colleague Teresa actually will put a link in the chat. I'm actually going to leave the main conclusions from this report for the first panel, but it does clearly show that the CEET region is currently a nascent market when it comes to inclusive insurance, with most insurance products focused on larger ticket commercial risks or wealthier individuals. However, and sort of going to Gorazd's comments, I mean, a large portion of the population across the region have informal employment or on low earnings and limited savings. Therefore, there is a real need for more sort of insurance solutions to be available to increase the resilience and ability to grow the businesses of these low-income individuals. Pleased to say that globally, a lot of experience has been gained over the last couple of decades, which is really very relevant to the CEET region and can help accelerate progress in the region. So over the next couple of days, you'll have the opportunity to learn from experiences gained around the world, as well as hear from colleagues in the region. For each of the sessions, we've picked topics which we believe to be of the most relevance to the region. And we think the event provides a great opportunity for all of us to put our heads together and to make collective progress on getting insurance out to those who most need it in the region. And with that, actually, I turn back to Klime and just say that I look forward to participating with all of you in the sessions over the next couple of days, and hopefully to making a difference to the low-income individuals based in the CEET region.
Thank you very much, Hannah, for your welcome address. And now I will invite Dirk Reinhard, the Vice Chair of Munich Re Foundation, to address his welcome remarks.
Good morning. Thank you, Klime. Dear Hannah, dear Katharine, dear Gorazd, dear Klime, all protocols observed. A warm welcome also on behalf of the Munich Re Foundation. I'm the Vice Chairman of the Foundation, and I'm responsible for the inclusive insurance activities of our program. The Munich Re Foundation has been created by Munich Re, the world's largest reinsurer, in 2005, and our work focuses on improving the livelihood of the poor, or we should better call them the working poor. And appropriate risk management, including insurance, is an important part of it. It's a great pleasure for me to be with you here today virtually, although I would have preferred to be with you in person somewhere in the region, maybe in Slovenia or Northern Macedonia or elsewhere. Even more, it is a great pleasure to see the learning sessions taking place, this conference taking place in a digital version, despite all the challenges related to COVID-19. I'm especially pleased to see that this event takes place in the CEET region. Why this? We believe that the role of insurance for a sustainable economic development is very important. When people become economically active, they take on risks which they need to manage. Understanding risk and what to do in case of a disaster strikes is a key element of a disaster management. But we also need tools that help to recover after disasters, such as insurance, which unfortunately is still not widely available, especially for the most vulnerable. Therefore, we need what we call more inclusive insurance markets that provide good products also for the low-income communities. The Munich Re Foundation, together with the MicroinsuranceNetwork, organizes the International Conference on Inclusive Insurance since many years to discuss opportunities and barriers for insurance that reaches those who are currently being left behind. However, most conferences, as well as most inclusive finance and inclusive insurance projects presented at our conferences, focus on so-called developing countries in Latin America, Africa, or Southern and Eastern Asia. But not much discussions how to close the insurance gap for the most vulnerable, focus on the CET region. And this is why we started the initiative together with our partners to organize such an event again this year, despite all the challenges. We need to understand the good examples for inclusive insurance in the region and the barriers for market development. What are lessons learned? Where's the potential for cooperation among different countries, especially when it comes to insurance against climate risks? The pandemic represents an unprecedented challenge. Global human development, a combination of the world's education, health, and income, is set to decline in 2020 and 2021 for the first time in a generation, according to UNDP. And let me add that those who are affected the most are the vulnerable poor. Appropriate risk management is key to recover from such disasters, and insurance is part of it. It can help the people at the lower end of the income pyramid that just work themselves out of poverty from falling back into poverty. And climate change will make the situation worse, especially for those who depend on agricultural income. It's great to see that IAIS and AtoI will present the results of a research project today that will give us a better understanding of where we stand in the region. But this event is just the first step. What needs to be done is to understand the barriers for market development and to develop national or regional financial inclusion strategies that involve all stakeholders, such as insurers, regulators, supervisory authorities, governmental representatives, and donor organizations. Such a joint effort can change a market and increase outreach to urgently needed affordable risk management tools substantially. I firmly believe that if we manage to develop risk management tools that provide value to the low-income sector, we will make an important contribution to sustainable economic development and to improve the living conditions of billions of people globally and millions in the CET region. Gorazd, in his introduction, just mentioned many relevant topics that will be discussed today. And sharing of knowledge and experience is an important step towards the goal of coming up with better insurance solutions. And I do hope that this conference is a start, and maybe we see many more financial inclusion strategies in the region. Again, a big thank you to all of our partners, IAIS, AtoI, the MicroinsuranceNetwork, and the Slovenian Insurance Supervisory Agency, and to Klima for facilitating and chairing this session. Thank you very much for all the participants for your registrations, for attending, sharing knowledge, asking interesting questions, and I wish all of us an interesting conference. Thank you.
Thank you, Dirk, for your welcome address. And last but not least, I would like to invite Katharine Pulvermacher, Executive Director of MicroinsuranceNetwork, who is also co-organizer of this event. So over to you, Katharine.
Thank you so much, Klima, and thank you to all of you who are participating in this event. I can see that there are 100 people in the room. Thank you to our co-organizers and longtime partners, Access to Insurance Initiative, Munich Re Foundation, and of course to Gorazd and Klima. A lot of effort from our respective teams has gone into preparing this event for you, and we hope that it will translate into some meaningful action and above all, contribute to reaching badly needed scale in the CEET region and beyond the CEET region. The Microinsurance Network is a non-profit Luxembourg-based organization, and we've been sponsored for many years by the Luxembourg Ministry of Foreign and European Affairs and the Ministry of Finance as part of their long-term commitment to supporting financial inclusion throughout the world and in Europe. Our mission is to support the development of healthy, responsible, inclusive insurance markets that can help to deliver badly needed resilience to the billions of those who lack access to insurance. And I do mean billions. Our best estimate is that at this stage, still approximately 4 out of 5 people around the planet do not have adequate access to either inclusive insurance or the social protection that would be needed to help them manage their risks and help them to cope with both daily catastrophes and more significant catastrophes. As climate change increases and accelerates in its impact, this will become a much, much more severe fragility and vulnerability for many, many people. This is, of course, a complex issue, and it requires collaboration between partners from across the insurance value chain and beyond it. It also requires collaboration across borders, such as you're seeing this morning, so that we can benefit from the lessons that have already been learned elsewhere. As the Executive Director for the MIN, and on behalf of our members, our board and our team, and our partners, I'm very pleased to contribute to this initiative and to foster greater inclusion. Ultimately, that means fostering resilience of the millions of consumers and hundreds of thousands of small businesses in the CEET region. Thank you very much.
Thank you, Katharine, and thanks to all our co-organizers of this digital conference. And now we can continue with the first session, and your facilitator will be Gorazd Čibej. So Gorazd, I will pass over to you to moderate the first session.
Thank you, Klime. So here we go. Today, our first session. We have some very exciting speakers and panelists. And we decided we will have this session in the way that first there will be presentations from the speakers, and that will be followed by the panel discussion, where I will ask some questions to the panelists. And of course, all the participants are also very welcome to ask whatever question that they have, and we will try to give our best answers. So not to lose much of the time, our session will last for an hour and a half. I propose that we go and start right away with the presentations. And first of the presenters will be Teresa Pelanda, who is the lead contact for the CEET and the Caribbean region, responsible for AtoI IAIS implementation activities and cooperation with supervisors and regional associations. She is furthermore the AtoI monitoring and evaluation specialist and responsible for the topic of climate change and disaster resilience. Today, she will present a very interesting topic, and that is the best topic actually to start our panel. This is the fundamentals of inclusive insurance. So, Teresa, you have the word, please.
Thank you so much, and hello everyone, good morning. Thanks a lot for your kind introduction, Gorazd. And I'm just checking if I can share now, not yet. Maybe if you could just give me the host function so that I can share the screen. Okay, excellent, now I have it. So let me just upload my presentation. And please let me know if this is visible now. Yeah, can you see the slides?
Yes, it's fine.
Okay, excellent. Thank you so much. So yeah, hello again, good morning, everyone. And also from my side, a warm welcome to this conference. So as Gorazd already said, my name is Teresa Pelanda. I'm from the AtoI, and it's really a pleasure to be here today and to set with my presentation a bit the scene for the following panel discussions. So before I start with the actual topic, let me just say a few sentences about AtoI. Hannah already mentioned we are the implementation partner of the IAIS on financial inclusion, and it's our vision to promote access to responsible insurance for the vulnerable people worldwide. So what we do is we support insurance supervisors and regulators to create the conditions that are necessary for an inclusive insurance market to grow. And what does that mean in practice? That means that we do research, we organize trainings, workshops, we facilitate peer-to-peer exchange between regulators and supervisors. So the title of my presentation today, as Gorazd mentioned already, is Fundamentals of Inclusive Insurance. And I thought as a first step, let's maybe refresh ourselves a little bit on the theory. What does microinsurance actually mean? How is it different to inclusive insurance? Is it different at all? Because often we also use these terms interchangeably. So let's have a look at some definitions. In 2007, in an IAIS landmark paper, microinsurance was for the first time defined as insurance that is accessed by the low-income population, provided by a variety of different entities, but run in accordance with generally accepted insurance practices. So you can see here the focus is on the low-income population, the poor, the vulnerable people. However, over the years, the concept broadened, and in 2015, the IAIS defined inclusive insurance for the first time, and they defined it as all insurance products that are aimed at the excluded or the underserved market, rather than just those aimed at the poor or a narrow conception of the low-income market. So you see that the target group broadens. It's not only about the poor or the low-income populations, but all those who, for whatever reasons, are excluded from access to insurance. And Katharine mentioned it in her welcome remarks that there are estimations that the potential market for inclusive insurance, which includes the market for microinsurance, is about 4 billion people. But let's go a little bit more into detail and let's see who are these excluded and underserved people. Of course, it differs between countries, but that there are some characteristics. And let's look again at what the IAIS says about the characteristics of the inclusive insurance customer. They often have low education levels, and especially when it comes to financial education or insurance awareness, the levels are very low. They often have low irregular disposable income, so that means that they earn on a day-to-day basis. And most of the money they earn, they spend on the essentials, let's say on food or on housing and so on. They are often difficult to reach, not only because they live in remote areas, but also because they are informally employed. And we see that quite often they don't trust insurance providers and generally in the formal financial sector. So as I said before, the differences, of course, there are differences between countries, between regions. But what probably most of them have in common is that because of their life circumstances, they are all exposed to quite a lot of risks. I guess most of them are facing much more risk than the wealthier people in a society. And they are those who therefore probably need protection the most. So why am I mentioning here this kind of multidimensional approach? Because if you really look at the people who are underserved, income is not the only factor that explains why they are underserved. But on the contrary, a lack of protection by insurance can easily throw people into poverty. So if income is not the only factor when we talk about the potential customers, it's also not the only factor to consider when designing a product. So inclusive insurance is not just about simply offering a cheaper version of an existing product. So I think it's useful to understand these different dimensions beyond just the income if we really want to find solutions. But let me go to the next slide and let's see. So what is it what they need then, if it is not only about income? So let's have a closer look at what's needed for an inclusive insurance product to be successful and which are the requirements that should be set to make the product and the entire process appealing for the low-income customer. So first of all, I just wanted to highlight again, we have seen that already when we talked about the customers, but I wanted to emphasize again that microinsurance, inclusive insurance is not just a scaled down version of a classic or traditional insurance product. The product as well as the processes need to be completely re-engineered to meet the characteristics, the preferences of the low income and the underserved market. So if it is not just a scaled down version, what is it then? And therefore, I wanted to answer this question, I wanted to introduce the SUAVE principles. You may have heard of these principles. They were developed quite some time ago, I think 10 years ago, by the Microinsurance Center, but they continue to be an established standard in microinsurance. And they require products to be simple, understood, accessible, valuable, and efficient. Let me give you some examples. Simple, what does that mean? I would say generally simplicity is key. We need super simple enrollment, no exclusions for pre-existing conditions, no lengthy claim settlements, and simple language. If the relevant information does not fit on one page, then this is just too much of information. Policies with pages of small print are useless to illiterate policyholders. Understood. The products need to be understood by the policyholder, and therefore it might be necessary to have some tailor-made educational tools in place, or some basic insurance training that can be provided by agent or through effective media. And it's not only about educating the customer, but we also need training for the intermediaries so that they are in a position to deliver the information in an understandable way. Then it's about accessibility. We need products that reflect the actual need and the abilities of the target market. So for example, someone whose income relies on or is based on crop harvest, it might be difficult to pay a monthly premium. So if there is a requirement to pay premiums monthly on a monthly basis, this may not lead to success. We also need products that are distributed by channels which consumers have easy access to. The information should be available in a timely manner, and consumers should be able to receive the benefits easily. If you have to travel for like 12 hours to get your claims payout, this is not accessible for the people. Then valuable. The product should respond to the needs of the clients. The price must be fair. The claims must be paid rapidly. Efficient. This means that the processes must be structured in a way so that the delivery channel and the insurer can transact with the policyholder and also with each other with very little effort and high effectiveness. So to summarize this, classic or traditional insurance has very complex policy documents with many exclusions, whereas inclusive insurance policies have a simple language, few exclusions if possible. They are often sold as group policies for more efficiency. And yeah, to just put it in simple words, they are just responding to the needs and the characteristics of the target group. And I would like to give you 2 examples of how insurers have innovated to reach the underserved, keeping these principles in mind. So probably the main way the industry has innovated and tried to respond to the specific needs of the target group is through the search for alternative distribution channels to better reach the target group. So today, besides the traditional distribution channels like the direct sales, brokers, agents, and so on, you can get your insurance products from MFIs, post offices, utility stores, pharmacies, community groups, MNOs, to just mention a few. And through these channels, insurers are getting closer to the everyday lives of their clients. And they often rely on trusted brands. So they cooperate with brands that are popular along the low-income clients, for example. And those who already have existing not only relations, but also platforms that can be used for, like, for example, for premium collection. And this enables insurers to reach scale and to provide convenient access to the clients. Let me go to the next slide. Another booster, so to say, for inclusive insurance has been recent developments in the digital space. They have made it much easier for the insurers to cater to the low-income segment effectively. So besides the use of a variety of alternative distribution channels, digitalization is another factor responsible for inclusive insurance growth in the last couple of years. I will actually not go into much detail here, as we will have a session on digitalization taking place tomorrow. What I just wanted to say here with this slide is that it not been one single technology that overturned inclusive insurance overnight. It's rather a combination of different blocks of technology along the value chain. So just a quick example here, when it comes to digitalization and the product development, we have much better satellite technology and data that can be used for developing, for example, index insurance products. Or distribution. We said distribution is key when it comes to inclusive insurance, and it can be enabled through, for example, mobile network operators. And also the premium collection can benefit from digitalization. You can, for example, deduct premiums from airtime or through mobile wallets. But as said, we will hear more about these examples tomorrow. And what I just wanted to say here is that the use of new technologies has really helped to better serve the underserved. However, what's interesting here is that we do see a trend in combining offline and online activities. So people still prefer having some sort of physical touch point. So for example, you organize a roadshow or something to raise awareness and then ask people to sign up for an insurance product via mobile phones. But as said, still some contact with the insurers. So this is about the industry and what they are doing to better reach the underserved and the low-income populations. But it's not only the industry who's asked to come up with innovative solutions to help make the underserved, the low-income people more resilient. Also, the regulators, the supervisors have a role to play here. And also they are considering the specific characteristics of the segments of the population. So let's have a look at the regulatory perspective and let's look at what the proportionality concept is about. So what we need are favorable regulatory environments that on the one hand allows for creative solution, what we just mentioned, the distribution channels and so on, but at the same time, they have to protect the clients, which are often first-time users, so they may not be familiar with formal financial products, and they are therefore easier victims for fraudulent transactions, for example. So let's see again what the IAIS says in this respect. So the IAIS has said that the insurance core principles, which provide a globally accepted framework for the supervision of the insurance sector, can be implemented proportionately. And the important point here is that the ICPs are meant to be applied taking into account the local market context and the risks arising. So that means that supervisors do have the flexibility to adjust certain supervisory requirements and actions in accordance with the nature, the scale, and the complexity of the risks posed. And this is what we call the proportionality principle. Of course, there is no one-size-fits-all solution, but there are a couple of practices that have been proven useful in the past. And I would like to share with you some solutions of dedicated inclusive insurance frameworks or features regulators came up with. So let's have a look at some features of inclusive insurance frameworks. Let's start with licensing. So we see that supervisors allowing more types of underwriters to sell inclusive insurance, with some of them with different capital requirements. In some countries like the Philippines, we have a microinsurance license. It was created and these microinsurance are subject to less stringent licensing and prudential requirements. Also, when it comes to product approval, supervisors may require inclusive product features like product simplicity, extended grace periods. They can allow for flexible premium payments or for more flexibility in the product design, for example, in bundling life and non-life products, or also allow for alternative forms of contracts and documentation. Also, when it comes to distribution, again, alternative channels, to allow for alternative channels to distribute inclusive insurance, and maybe also for simpler training requirements, and also allow non-financial intermediaries to sell microinsurance or inclusive insurance. Then the next point here on the slide, disclosure. Supervisors, regulators may require simplified documents, maybe even issued in local languages. So they can ask for extra simple language or language-sensitive disclosure to ensure that the customers can take an informed decision. And then we have claims. again, here, supervisors may require shorter timelines for claim payout. This is particularly relevant for the low-income segment, as there is an urgent need for a prompt and painless claims settlement, as the policyholder would have only little financial buffer normally. There are other features, like when it comes to premium collection, there are also some kind of incentives the supervisor can develop for the insurance industry, like faster product approval or lighter regulatory fee structures, and so on. So this is just to mention a few, and maybe just one sentence about the additional role the supervisor can play, because it's not only about regulation and supervision. The regulator can also play an important role when it comes to awareness raising, educational campaigns, include financial education into school curricula. Supervisors can also be the one coordinating the processes, bringing together the relevant people to raise awareness of the benefits of insurance with policymakers. So these are just a few examples of additional roles the supervisors, regulators can play in enhancing access to insurance. So with this slide, I just wanted to provide you with very few examples, but if you're interested in seeing more concrete examples, I would also like to invite you to go to our website and look for the Inclusive Insurance Regulation Tracker. And there we are collecting examples from around the globe on how supervisors and regulators are implementing dedicated inclusive insurance or microinsurance frameworks. So this was just a very brief overview of some of the fundamentals of inclusive insurance from the perspective of both the insurance, but also from the supervisors, regulators. And I think over the next days, you will hear more concrete examples and new trends in this area. So let me conclude here by just saying, maybe this is already my last slide, by just saying that in the last 10 to 15 years, inclusive insurance markets have grown significantly in all regions. It's difficult to estimate the exact number of people covered because there are different definitions and so on, but the Microinsurance Center estimated that about 280 million people globally are covered by at least one microinsurance policy. So new technologies are boosting market coverage. We see a growing middle class worldwide. We see growing middle classes, but still many of these individuals still lack a formal safety net provided by insurance. And they will always have this risk of falling back into poverty because of not being protected against these shocks. Something that we can now see during this pandemic situation very well. Also, climate change may make the situation worse because the frequency of extreme events will continue to increase, and low-income countries are normally those who are most vulnerable to the impact of climate change. So there's still much to do, and I think this event is a great opportunity to start analyzing also the situation in the CEET region, where so far inclusive insurance is not yet as developed as in other parts of the world, and to really talk about the opportunities, the challenges of inclusive insurance market growth in this region. And let me maybe just stop sharing my screen and go back to... Okay, and I see that also my camera turned off, so I will turn it on again. Now you can see me, right? Okay, great. So I hope that was in time. I'm just looking at the at my phone, and I will pause here and hand over back to you, Gorazd, I guess.
Thank you, Teresa, as always,
Thanks.
for your excellent presentation and setting the scene of the insurance, of inclusive insurance. I see we already have some questions popping up in the chat, but I propose that first we hear the presentations from all the speakers, and then at the end I will address, because it will be interesting to see different perspectives also from the industry, from supervisors. So I think it will be more challenging to address all these questions at the end. And we first just give an opportunity for the speakers and later panelists to present their presentations. And now, from the general introduction, we are moving to a more concrete presentation. And this is the landscape of inclusive insurance in the CEET region. This presentation will be presented by myself, and together we will make a presentation with Klime Popowski, who everybody knows. He's well-known person in insurance world, especially in the Western Balkan region. He's initiator of many initiatives, and I'm very glad to cooperate on many projects with Klime. Klime is the professor of insurance at St. Clement Ohridski University in Macedonia, and he was the president of expert council within Insurance Supervision Agency of Macedonia for 10 years. This is a long period, so he has a long supervisory expertise in this field. I propose that we start with the presentation. I will just share the screen. I have some problems with sharing the screen. If IT can help me, because here it says that try one more time. Is it possible, because it says that my screen sharing is paused, is it possible that Teresa didn't log out? So I cannot share it?
I think I stopped sharing.
Here we are. Here we are.
Yeah, okay.
That's perfect. Okay. So, inclusive insurance landscape in the CEET region. As I said, this presentation will be shared by me and Klime. I will give some introductory remarks, and later I will pass over to Klime, who will give a more detailed perspective on current state of inclusive insurance in the CEET. So
we cannot still see the presentation on the screen.
You cannot see?
No.
Can what about now?
Now it's fine. Go on the first.
Yes, now we can see.
Yes.
Okay, great. So I will set the scene about insurance market landscape, and later on, Klime will cover the topics on the current state of inclusive insurance based on the survey results, and we will conclude with some conclusions and future perspectives. So you can see the first slide of the CEET region, which consists of 31 jurisdictions representing different levels of economic development. And the majorities of the jurisdictions, except of the European Union countries, is classified as emerging and developing countries, and have insurance penetration rates below the world average. Based on the World Bank's income classification, this is World Development Indicators from 2020. As of 2020, 20% of the CEET region countries are lower middle income economies. 40% are classified as upper middle income economies, and 40% high income economies. The population within the region amounts to 506 million, And since the 90s, the countries of the CEET region have largely transitioned to market economies with democratic forms of government and now participate in global markets for goods and services. While many of these countries have experienced significant economic growth, including a growing financial service sector, most continue to face a large insurance protection gap. About this protection gap, we will hear a lot during our presentation and also in the presentations that follow. Of course, the CEET region is also vulnerable to natural disasters such as floods, earthquakes, bushfires, winds, and droughts, among the others. On this slide, we can see the graph. And this is the early studies of the insurance markets in Central, Eastern and Southeastern Europe that are mostly indicated as monopolistic, uncompetitive and relatively young markets. Over the last 3 decades, the privatization of the insurance sector, liberalization and regulation of financial services, and also alignment with the International Association of Insurance Supervisors, including with insurance core principles, they all paved the way to reform of the insurance industry. The majority of the CEET countries are members of the EU or are in the accession process. That means that their jurisdictions either align or will eventually align with the EU insurance directives. Other drivers of insurance market growth include favorable economic developments, monetary and financial stability, improved living conditions, increased risk and insurance awareness, and the entrance of foreign-owned insurance companies. Establish independent and effective insurance supervisory authorities equipped with which is very important, sufficient resources, including insurance-trained professionals and actuaries, were also crucial in this process. One key characteristic of this vast region is the significant cross-country diversity. The CEET region is highly heterogeneous in terms of politics, economy, and financial systems. Insurance markets differ significantly in size, concentration, and level of maturity. This graph shows the gross written premium volumes, insurance penetration, and insurance density for life and non-life business for each jurisdiction. And jurisdictions can be clustered in 3 groups. First one, the EU member countries. Second one, the Eastern European countries and Western Balkan countries. So you can see this on this slide how heterogeneous they are. On the next slide is illustrated by the size of the bubbles. Russia, Turkey, Poland, and the Czech Republic are by far the largest markets. The insurance markets in the CEE EU are already much more developed than the insurance market in Eastern Europe. So the insurance markets in the Western Balkans are, as we can see, somewhere in the middle. Slovenia, which is not included in this graph, is an outliner in the CEET region, and it shows significantly higher insurance market indicators. The CEET insurance industry is also further dominated by the non-life sector, and life insurance plays a less significant role and is still fairly underdeveloped, except very few countries like Slovenia, Czech Republic, Slovakia, Poland, and Hungary, which have penetration rate over 1%. And average spending of more than 150 euros per inhabitant. Life insurance also suffers from a general lack of awareness, inadequate social protection systems, and unfavorable regulatory frameworks. Also low living standards and underdeveloped domestic financial markets. Motor insurance is, we know, undoubtedly remains the main business segment in the CEET region, which accounts for a little bit more than half, specifically, more precisely, 53% of the non-life insurance premiums. The top 5 markets in the regions together amount for about 3/4 of the regional non-life business, and this is also reflected in motor business specifically, where total motor gross written premium of the top 5 markets account for 72% of the total motor gross written premium in the region. Another slide, which is very interesting, it is about distribution channels. This is also based on another survey that we did, also together with Exprime. This was the survey of the city distribution, and it came out with a city distribution report. And data showed that insurance agents, including ancillary agents, intermediated 40%, the largest share of the regional gross written premium volume. Insurance brokers and other channels consisting largely of insurers, wholesale network hold comparable shares of about 20% and 23% respectively. Bank insurance distribution is still in rise. It weighs for about 10%, while internet online sales accounted for only 2% of the total intermediated premiums, which shows that there is still some place for this. However, one should keep in mind that online sales are in many cases reported also under different categories. For instance, where the internet sales platforms are owned and managed by insurers or insurance brokers themselves. Lastly, it is about the structure of the insurance supervisory authorities, and there are notable differences among CEET jurisdictions in terms of how supervisory authorities are structured. Intra-regional differences reflect multi factors. This can have some historical reasons, also the structure of the financial system. Also, it might be the question of political structures and different traditions, and the size of the country and the financial sector. The policy recommendations of the IMF and the World Bank under the Financial Sector Assessment Program have further influenced also this aspect. There is a wide range of supervisory models. For example, integrated institutions, they cover all 3 main financial sectors, namely banking, insurance and pension, and securities. This is full sectoral integration. Then we have partially integrated institutions. They cover only 2 of these sectors, usually only insurance and securities. They may also exist as an autonomous public institution, or they operate under the Ministry of Finance. And last but not least, we have not integrated institutions. These are insurance supervisory authorities that supervise only insurance. Most commonly, financial supervision is performed by integrated institutions, namely 13 jurisdictions. Out of these, 10 supervisors reside within the central bank, and 7 supervisors are partially integrated supervisors, out of which 2 are located within the Ministry of Finance. 6 jurisdictions have supervisors that are not integrated institutions. Across all categories of integration, the majority, this is in numbers like 40 supervisors, are autonomous public institutions, meaning that they do not reside in the central bank or ministry. So far, none of the countries in the region has a Twin Peaks model, which is where 2 different agencies are in charge, one of prudential oversight, whereas the other one of conduct of business. The study that we conducted in 2019 revealed that 3/4 of the interviewed authorities, they have regulatory and supervisory powers, while just 1/4 have only supervisory powers. And this indicates that implementation of the IAIS standards and guidance is to a large extent in the hands of the supervisors. There is no authority with only regulatory powers, and mostly all authorities are responsible for prudential supervision, while close to 90% are also responsible for market conduct supervision. This is in short what I wanted to present, and at this point I will pass over to Klime, who will continue with the presentation. So Klime, the word is yours.
Thank you, Gorazd. I will start with addressing one of the most important challenges, which actually was the trigger to organize such event, insurance protection gap. Insurance protection gap differs widely in terms of size, nature, and dynamics, depending on the line of business and the general maturity of the insurance market. The current condition prove the importance and the need for actions to narrow the protection gap in the CEET region. This is one of the reasons why we need such an event. Next slide, please. The Swiss Re Institute estimates that the combined global protection gap was a record of $1.38 trillion in 2020 for natural catastrophic mortality and health care, more than double its level comparing to 2000. The biggest gap is in the health insurance gap, but natural catastrophic risk has the lowest level of coverage in percentage terms. Back 4 decades ago, only around a quarter of losses resulting from natural disasters were insured, even in highly developed countries. Even today, less than half of all losses are covered. However, the situation in developing and emerging countries has not improved at all in decades. The proportion of insured losses is still well below 10% and often enough almost zero. Next. The CEET risk landscape is very diverse. The region is largely exposed to earthquake, floods, windstorm, drought, hail, winter storms, and wildfires. The World Risk Index, developed by the United Nations University Institute for Environment and Human Security, show the overall vulnerability to natural disaster. It is calculated on a country-by-country basis through the multiplication of exposure and vulnerability. Exposure covers threats due to net cat risks. Vulnerability is comprised of 3 components which are weighted equally in the calculation, and those are susceptibility, coping, and adaptation. The risk range is from 0.09 to 36.45. According to the risk, countries with very high risk exposures are Albania, Montenegro, Romania, Macedonia. In the second group of countries with middle level of exposures are Armenia, Azerbaijan, Georgia, Bosnia and Herzegovina, Hungary, Serbia, Turkey. This diagram addresses the need for emerging actions in introducing effective risk management techniques to protect against severe economic losses, where inclusive insurance is one of the key tools. Next slide. So in order to gain insights and to assess the current status of the inclusive insurance market and regulatory development in the CEET region, this year in March and April, the AtoI and Insurance Supervisory Agency of Slovenia jointly conducted a survey among representatives of the CEET insurance supervisory authorities. And this report today, it's published, as you can hear, by introduction speech of Hannah Grant from Access to Insurance. Now I will share with you the most important findings of this report. Next slide. 32 authorities from 31 jurisdictions were invited to respond. 24 authorities completed the survey. The questionnaire consists of 4 sets of questions. Next. So let me share with you the main findings. Regulation is a key instrument for supporting the growth of inclusive insurance markets. To date, none of the response jurisdictions has implemented inclusive insurance legislations or developed a definition of microinsurance or inclusive insurance. However, there are some products present that, due to their product features and target groups, can be considered inclusive. 11 countries noted at least one type of inclusive or microinsurance product in their market. Interestingly, the most common types of inclusive insurance are agriculture and climate risk insurance. Property insurance targeted at the low-income market is also being sold in a few jurisdictions, while other types of inclusive insurance are being sold in very few markets, such as health, personal, accident insurance, life, credit life, and funeral expenses insurance. Next. Developing a national financial inclusion strategy is an important step for inclusive insurance. 10 respondents have a national financial inclusion strategy developed, while 1 authority is in the process of preparing. Out of 10, 7 authorities have a standalone strategy: Belarus, Bulgaria, Georgia, Kazakhstan, Ukraine, Russia, and Slovakia. While 3 authorities, Albania, Poland, and Kosovo, includes a financial inclusion strategy in other strategic documents. Majority of supervisors is not planning to create a strategy or an action plan in the mid-short term to develop inclusive insurance. 3 jurisdictions plan on developing a strategy for inclusive insurance. Next slide. Studies on the inclusive insurance can help inform inclusive insurance policymaking while also providing data to insurance who typically do not have much information on low-income segments and their needs. In 8 jurisdictions, the response authority is aware of research on the microinsurance or inclusive insurance market conducted by public and private sector stakeholders or international organizations. So you can see the name of these surveys, and in the report also you can find the sources. Next slide. CEET jurisdictions have other supportive legislation to different extent as set out in the diagram. It is worth noting that 5 most common types of supportive legislation are supportive of digital insurance business models. 9 authorities stated that they currently have no other supportive legislation in place. 1 jurisdiction highlighted its participation in the AtoI Inclusive Insurance Innovation Lab. Others noted encouraging the use of remote means for taking out insurance contracts, like online selling, the establishment of a fintech contact point, and establishing an innovative regulatory sandbox. Next. The authorities were asked to identify the most pressing risk for the low-income and low-middle-income population segments in their jurisdiction. The responses are arranged from the most to less important. And as you can see, the most important are natural catastrophic risk, followed by unemployment, financial education, property risk, and others. In the last part of the survey, authorities were asked to point out their needs in terms of the supervisory capacity building. The answer, arranged from the most to least to less important, shows that supervisory practice is most relevant, which includes implementation of risk-based supervision. Development of existing and creating new supervisory tools, data collection and processing, and thematic supervision. Other considerations are prudential supervision, market conduct, and consumer protection. Next. Now I will end up with drawing some conclusion and some future perspective view. And the last slide. Based on the survey findings, several observations can be made. The main barriers that were identified are low income and affordability, lack of data on the inclusive insurance market, and insurance sector is still largely focused on wealthy and corporate segments. The low-income population in many CEET countries has long been able to access social welfare payments from their governments and is largely unfamiliar with insurance products. Distribution, underwriting, administration, and claims handling practice built for dealing with large insurance policies might be undue, burdensome, or uneconomic if applied to small insurance policies. A key reason the insurers have tended not to consider low-income segments attractive is that individual premium size were perceived as too low given per policy fixed cost. Distribution networks are also traditionally incentivized via remuneration structures to focus on large premium products. Even if commission rates are high, premiums per policy are much smaller in inclusive insurance, resulting in lower earnings for agents. However, there is a significant room for growth in the CEET inclusive insurance market. The microinsurance network suggests that low penetration points towards a market opportunity. Furthermore, the increasing focus on the region on innovation, digitalization, and fintech can bring some positive spillover effects. For example, the use of mobile insurance, digital transaction platform, or e-signature can unlock opportunities to reach excluded and new segments of customers. Supervisor can see how the development of new technology can be expanded or replicated to the benefit of low-income groups. Key to enabling inclusive insurance growth are policy action on the supply and demand side. In this respect, there is room for improvement in public-private collaboration mechanism between governments and the insurance industry in order to create favorable conditions. The insurance industry needs to create new business models designed towards making insurance inclusive, create more innovative products, and rely on new distribution mechanisms. Finally, regulatory adjustments can provide incentives for innovation and for the use of distribution mechanisms that reduce transaction costs and importantly, create favorable inclusive insurance regulatory frameworks based on the principle of proportionality. So those are the final remarks and comments from this survey.
Thank you very much, Klime, for explaining the results of the survey. And being conscious of the time, I suggest that we move further. And our next presenter will be Mimosa Kaci. She's Deputy Executive Director of Albanian Financial Supervisory Authority. She has a long experience in the public administrations and in the academic sector as lecturer at the university. And she also holds a doctoral degree in finance and is author of a number of research publications. Mimosa today will present a very interesting topic. This will be the case study from the region. Why is inclusive insurance relevant for the region and especially for Albania, which she represents today. So, Mimosa, I pass over to you. Thank you.
Thank you very much, Gorazd. Just sharing the screen. So, okay. So thank you very much, Gorazd. It's a pleasure for me to attend the conference and to be part of this honored panel. I would like to thank the organizers for the invitation. This is a very good opportunity to share our views about inclusive insurance from different perspectives, from the regulators and from the industry perspectives, and also to reflect on challenges and opportunities. The Albanian Financial Supervisory Authority is among the insurance supervisors that aspire to contribute to market growth, in addition to its core mandates of market stability, efficiency, and protection of consumers. Although the market development objective is not explicitly stated in the law. These objectives is set by the AFSA strategy, which is in place, the strategy for the years 2018-2022. In my presentation, I'll try to answer the question why inclusive insurance in Albania and in the region, and I'll guide you through it step by step. First, I will give a very short overview on the insurance market in Albania. The insurance market is dominated by the non-life insurance with about 93% of the gross written premiums, and the life insurance have only a 7% participation. The market is still concentrated in traditional compulsory insurance, around 64%, and is mainly MTPL. And there is limited take-up of voluntary products with 36%. The penetration rate in Albania remains still low, around 1.03% of the gross written premium related to the GDP for 2020, and particularly the low penetration rate is in the life insurance industry. Also, the insurance density is in low levels. It's around 47 euros per capita. So let's have a look in the voluntary products. The property insurance, it's estimated that less than 2.5% of the households in the country are covered with the property insurance. There are around 47 and 700 contract issued fire and other perils, and 38,000 of which covers also the earthquake risk. I would like to mention that Albania is prone to natural hazards and is also vulnerable to their impacts. And another important fact or interesting fact is also that these contracts are mainly bank driven. So because of the bank's requirement for a policy during the lending process. The life and health products, so compared with the number of adult population, more than 2.2 million. So this is the number of adult population. The whole population is more than 2.8 million inhabitants. There are only a very limited, it's a limited number of life products and health products, which make around, these together, only 8% of the adult population have a life and health product. So this is the rate of the uninsured people among the adult population. So these figures shows that agriculture, life and health insurance might be potential sectors for the development of inclusive insurance. The agriculture sector, on the other hand, is a very important sector with around 90.3 or around 20% of Albania's GDP, where 26% of workers are employed in this sector. This figure, I should mention that is not considering the informal part of the economy that are also working in agriculture. So the agriculture, in our view, has high potential for development of inclusive insurance product, and currently there is a demand, but the supply is also lacking. There is only one insurance company in Albania which offers the agriculture insurance, with only 3 contracts issued during 2020. The risk is very high, and the companies are not ready to take the risk, or otherwise the policies are very expensive, not affordable to the farmers, and so this also is reflected in the very limited number of contracts issued during last year. Other potential segments for the development might be life insurance and health insurance. During the year 2020, there is an increase in the health insurance with 17% in terms of gross written premiums compared to the previous year. This also mainly due to the pandemic situation. So we see an increase of awareness in the population, mainly among the medium and high income population. Why inclusive insurance? It can have a positive impact in insurance growth in Albania, but also in other countries in the region with similar markets like ours. And inclusive insurance is the access to insurance for all the population. It can help to overcome insurance exclusion stemming from low income, informal employment, and geographic barrier. Albania has a very rough geographic relief, and some rural areas are not easily to reach. Inclusive insurance can decrease the number of the excluded from the existing insurance market despite of their income level. They are not necessarily poor people and low income level. The higher participation of the population in the insurance schemes will result in an increase of the penetration rate. Albania was the first country from the region which was involved in the Insurance Innovation Lab. Actually, the Innovation Lab, which took place during the years 2017 and 2018, was the starting point, or I would say the first sparkle for inclusive insurance in our country. The project aimed at developing innovative solutions, and a very wide group of different stakeholders sit together. They changed experiences, learning by each other, by international experience and multi-party cooperation. There were 3 national and 2 international workshops. It was a very valuable experience for the first time were gathered all stakeholders as the supervisors, the governmental representatives, the demand and the supply side represented by intermediaries, insurance companies, the association, banks and microcredit institutions, as well as civil society and farmers association. In Albania, the project was focused on the agriculture sector, so on the insurance, also because there was an interest for this type of products to cover the risks in agriculture. And the team has developed two prototypes, a greenhouse insurance and an index insurance for seedling, which needs to be further elaborated. So as I mentioned, there was a lot of interest from various sides in agriculture. Is also in line with the priorities of the government to boost and to support the agriculture development in the country. During the last workshop in the lab, it was decided that the lab should continue. House will be the association, and the company commitment is very fundamental to continue the work done so far by the during the lab. So the first part, as I said, was the lab when we all started to discuss on inclusive insurance. We saw that there was a lack in our regulatory and legislative part, so there is no definition for it. And after the lab, everyone was clear about the inclusive insurance, about its importance and how it can help and it can support the population and also the economy of the country. Further activities, I would like also to mention that AFSA is working very close with the Bank of Albania on drafting a joint strategy. Each institution has its own strategy on financial education, and this is and the aim is to have a common strategy which will be wider and will cover the whole financial sector. And the first time that the financial inclusion is also part of the strategy, because until now AFSA had the financial education strategy, its own strategy, institutional strategy, and now we are aiming at creating a wider one together with the Bank of Albania for the whole financial sector. Furthermore, the staff of the FSA has participated in capacity building workshops on inclusive insurance organized by different international organizations. The staff attended the inclusive insurance training for supervisors in June this year, organized by IAIS in collaboration with Toronto Center and AtoI. And during 2019, AFSA also was part of a project building the capacity of the supervisor authority in specific features and role of microinsurance products. So it was split in two sessions, so in June and in October. And during this, in the framework, I would say, of this project, the staff was trained, and the train and the workshop was also related to the importance of the effective supervision of this type of insurance. challenges and opportunities for the regulators. In my opinion, the regulators should focus on three main activities: awareness. So I have split in three main groups: awareness, technology, and partnerships. So they should initiate financial education campaigns, because the raise of awareness and financial education is an important contributor to financial inclusion. But anyhow, alone, because the financial inclusion goes so far, so it has to go hand in hand also with the consumer protection measures, with the prudential regulation, monitoring, and efficient supervision. The regulators and the supervisors should support the market towards development of new products. They should allow the using of new technology and the innovative distribution channel. And what is very important from now, also from the market side, to develop new product tailors to customers' needs. The use of international experience is a key element to identify opportunities and adopt best practices, to learn from other countries which have a longer experience in inclusive insurance, and the engagement of other governmental institutions and sector-based organizations to create insurance awareness. So also this type of partnership is very important on a national basis. Furthermore, I would say that in our case, so for the region, the cooperation among the regulators and among the supervisors and common initiatives for the development of inclusive insurance are also important. As we could see also from your presentation and from the survey, only few countries in the region has an experience in inclusive insurance, and there is still a considerable part of the population in these countries excluded from the insurance. I want to thank you for. I want to thank you, and if you have any questions, I'm very happy to answer. Thank you.
Thank you, Mimosa, for an excellent presentation, based also on the case study from Albania. It is always very interesting to see some real actions going on around the CET region. Now, last but not least, we will have also the opportunity to hear from the industry perspective. And we have today Sergei Simoniti with us, who is the chairman of the management board of COFAS. Previously, supervisor director of the Insurance Supervision Agency. So he has vast experience in insurance supervision, reinsurance, and direct insurance. So Sergei, I'm very much happy to have you with us today, and I pass you over.
Thank you, Gorazd. Good morning, everyone. First, I will try to share the screen. Second, yes, this works. And now I'll try to present it in a proper way. Okay, so good morning again from my side. My name is Sergei Simoniti. First of all, I need to make two disclaimers and one general statement. The first disclaimer is that I apologize in advance if I will be repeating something which is obvious. And secondly, I will also use the experience from what I heard in the past probably from many of you who are participating in this seminar. So these are not probably my original ideas, but these are the ideas of most of you who are here. And I tried to put them together and I will try to explain the relevance of those ideas in respect of microinsurance in the context of the perspective from the industry side. My second disclaimer is that I will probably talk more about issues, or I will pose the questions, then provide the solutions. But I think it's really necessary for all the participants, all the stakeholders in the microinsurance food chain to really actively discuss the issues. And my general statement is, and that's why I'm really happy to be here, and I thank you I thank the organizers for inviting me. My strong belief is, I'm a strong believer in insurance. I believe that historically, and I would say really from civilizational point of view, insurance has proved to be the most effective risk mitigating and risk transfer mechanism we have devised. I mean, we as the civilization. And it's really a pity for all of us that those who are deprivileged are mostly excluded from this mechanism. And I think that microinsurance, or the discussion about microinsurance, is really what we need to do in order to include all of these strata of population all around the globe. Just a few words about me. Because I'm a strange speaker here, because currently I am employed as the CEO of COFAS PKZ. COFAS is an international group, and basically we are dealing only with trade credit insurance. So our clients are only corporates. So I have no direct connection right now with microinsurance. However, as Gorazd mentioned, I used to be his predecessor, and I was really very much engaged at IAIS on the microinsurance issues. I was chairing for a couple of years the financial inclusion working group, and this was really one of my best years in my 25-year career in insurance. And I was really, whilst being the supervisor and also when considering going back to the industry, I was really thinking that microinsurance is an opportunity for all of us in the CEE and Transcaucasian region. And it's really that microinsurance is not something really pertaining to Africa or to Far East or to South America. We have huge strata of populations here, which are the proper, let's say, clients for microinsurance. But I will talk more about the issues in this region a bit later. So, just to set the scene, what are the, let's say, the most important starting points? The first one, let's say, from more or less from the policy or from government perspective, is that we are facing a huge protection gap. I think at the beginning, there was a lot told about this, about the protection gap worldwide. We are facing increasing inequality. That's a reality. And the protection gap and increasing inequality is basically putting the vulnerable populations even in a more vulnerable position. Basically, they take more risks, and the protection gap is increasing. And of course, we are also talking about the emerging risks, such as we are now facing with COVID, such as natural disasters, which are basically resulting in the agricultural risks which are faced by these, let's say, deprivileged populations. From the industry perspective, what is important is that in all traditional lines of business, in the European markets, and I'm not talking only about EU, I'm talking also about the outside EU markets in the region. Basically, we have the saturation of traditional of the markets. We have high level competition, and the margins are getting lower and lower. And probably you, as the supervisors, are really being worried, and you and your actuaries are really being worried how whether in such competitive environment the industry can still have a sustainable business model. And from the supervisory perspective, what is really important on the microinsurance is how to do it fairly to the consumer, how to do it fairly both on the prudential side, i.e. Having enough capital, having enough means to cover the losses. And secondly, and in the context of microinsurance, even more importantly, how to do it fairly in the sense of market conduct, how to explain fairly the product to the consumer, how to design a product so that it will be fair to consumer and useful to consumer, and basically how to make, to put it in microinsurance context, how to make the product suave, which is a very nice word. What are the most important deliberations for the industry? What are really the let's say the key points around which the discussion in the industry is following? First of all, of course, it's a big interest for the industry to cover uninsured segments of population. Again, I think what we really need to emphasize, we are not talking about Africa. We are not talking only about, let's say, the poorer parts of Europe, such as Moldova, Albania, Kosovo, and so on. We are also talking about the huge populations in Poland, which depend on agriculture, how they can be covered, and also in many other countries of European Union. Second deliberation, which is really an issue here in the region, and we will talk about this a bit later, is the necessity of volumes. Insurance, in general, by definition, of course, is only about volumes. Whenever we want to talk about sharing the risk, we need to have some sort of equalization within a large population. And if we are talking about microinsurance as being cheap insurance, because it needs to be affordable, let's put it in a very simple way, the prices need to be low, the necessity of volumes need to be is so much higher. The third point, which needs to be fully understood by all of the stakeholders. If we want to make an insurance product affordable, we need cost optimization as a precondition. And how we can do it? Digitalization and use of modern technology, a bit on this a bit later. Simplification of products, which is not only good for the clients because they are more clear, but it also lowers the costs of administration. And the change in distribution models. We need a complete rethinking on how to distribute such products. Then we have claims issues. If we are talking microinsurance, the products need to be, the coverage needs to be absolutely clear. And we need to also to lower the cost of claims management. And the last but not least, current regulation is rather burdensome is expensive in a sense that that it poses, let's say, a high cost for the insurers without, let's say, being adapted to the needs of microinsurance clients. And now to go a bit deeper into those points. I will talk about our, let's say, sub-region, which is popularly called Western Balkans, but technically it's former Yugoslavia. I just wanted to show you what is the issue of the volumes. If we are looking at this map, this used to be 30 years ago one country, and I'm not talking politics right now. I'm talking the difficulty of setting up a sustainable business model in microinsurance. This country had 30 years ago about 25 million euros inhabitants. Right now, it's technically 7 countries with GDP ranging from $26K per capita in Slovenia to $4,400 per capita in Kosovo. We have huge discrepancies in populations. In Serbia, we have almost 7 million inhabitants. In Montenegro, less than 1 million. And from the industry perspective, if we want to make this region one microinsurance market, we would basically need to somehow make the same product for all of these markets, which is basically, and which have vastly different regulatory regimes. 2 of those countries are European Union members. One of these countries is a Euro country. The rest, of course, are hoping to become EU members, and we are fully supportive of this. And each and every one of them has a bit different rules on, let's say, market conduct, which is crucial for microinsurance. So in order to properly put microinsurance in place in such a region, we would need to have some sort of regulatory convergence so that the providers from the industry could play with big numbers. And the same goes, I would say, for the whole CEE region and even further to the Transcaucasian region. Of course, it's different. Russia is a large country, Poland is a large country, and so on. But let's say the most segmented markets are the markets which need the microinsurers the most are really small and segmented, and somehow there needs to be a cooperation or a forum in which, let's say, the regulators and the industry can discuss how to make, let's say, at least the smallest common denominators for this market, so that the industry can devise proper products with proper sales channels, with proper business models in order to provide these populations with proper coverage. Second point is about digitalization and advanced technologies. Tomorrow there is a session on digitalization, so I will not lose too much time. But to be very practical, if you are talking about remote insurance, how to conclude an insurance contract by phone, via mobile phone, how to provide proper disclosures on the phone screen, how to say what is covered, what is not covered, so that the policyholder will understand, so that there is a proper, let's say, chain of events, what happened, so that the regulator will be happy in respect of legal requirements. And it's not only about digitalization, does not play the role only at the time of the conclusion of the contract or in the maintenance of the contract, but it's also crucial for the claims management. And here I will again, the industry needs to be clever about it, how to use properly the advanced technologies in claims management. Here I will cite an example, I will quote an example, which I heard when I was still chairing the Financial Inclusion Working Group at IAIS. A provider of microinsurance in India basically put a chip, was covering, the insurance was covering the camels, like, you know, animals, which are at the same time the means of transport and the means of providing milk. And the insurer basically put a chip in each and every ear, or in the ears of all of the camels. And basically the agreement was, if you present the chip, you can claim a total loss of a camel. And of course, the camel owners were cutting off the ears of the camels. So it was like a shot in the knee for the insurer. And then they changed and put the chips in the thighs of camels. So to be practical, with the chip in a camel, we can facilitate the claims management. We can lower the cost of claims management, but we need to do it in a clever way. Simplification. If we want to make microinsurance viable, we need to simplify the product. Simplification is good for the consumers, because basically simplification means more understandable product. Simplification is cheaper to administer, because insurance in principle is expensive. The biggest issue, I think, or the biggest challenge for insurance right now is how to lower the costs, the administration costs and the operating costs. Claims management, the product should be simple, not only for the client's sake, but also for the sake of insurance. It should be very clear. It should be out solution whether something is covered or not covered. And simplification is very important, that there is, let's say, much less need for the middleman, because if the product should be simple enough that there should be no need for expert advice. The most important thing probably in microinsurance is the rethinking of distribution models from the side of the industry. Insurance distribution is expensive. Here we are, again, we need to be absolutely clear. We are talking about the commissions to agents and brokers, of bank insurance and so on. We need to cut this expensive down somehow. But there should be a use of, let's say, alternative distribution models like affinity groups. I'm talking about associations. I'm talking about cooperatives in agroinsurance. And here is a question for regulators: how and do such affinity groups need to be regulated as intermediaries, in what way? Of course, we are on the industry side. We are also very much aware that there need to be some regulatory, supervisory, and policy adaptations, I would say, from the side of the supervisors and from the government. One is contract regulation. Contract regulation for microinsurance needs to be simplified. And we are not talking about being simplified in favor of insurers. It needs to be simplified in favor, absolutely in favor of consumers, but it needs to be simple. I already talked about the regulatory differences between jurisdictions. If we want to have volumes which would make microinsurance viable in the region, we need to somehow to solve these differences. On the supervisory side, what I think is really important, and it's important for us as the industry to understand it, what are the proper market conduct, what is proper market conduct monitoring? I don't know. I think that the supervisors should set a set of early warning indicators, such as, let's say, low claims rate ratios, and so on. And we need to be aware of this so that we know what supervisors are sensitive about. The other issue is how to regulate the use of mobile devices. And again, insurance regulation is expensive for the insurers. How can we, let's say, be savvy, or how to be really clever that we as the industry are properly regulating without incurring unnecessary costs, which at the end of the day will be transferred to the consumers. And last but not least, what is extremely important for such, let's say, segments of population, we need to work together with educators, with supervisors, and with policymakers on financial education and promotion of insurance. Because as Gorazd mentioned at the beginning, the insurance really does not have a great reputation, at least in our region. Again, as said, I will not. I'm over my time. What is really important is that basically all of the products can be adapted to be a microinsurance product. It really depends on the needs of the population. And just a few words on microinsurance and COVID. I believe that COVID has increased the protection gap, but also has brought us huge advances in digitalization, which can be useful in adopting microinsurance to, let's say, to be more viable. COVID, of course, opened the new issues in health insurance. In general, it's very important. Let's say what we are facing in industrial insurance is business interruption losses, which seems not to be applicable in microinsurance context. But if we want to cover small entrepreneurs, or basically people who are dependent on their work for their business, I think we should also look at this coverage. The financing it will be more and more important, and the people will need to insure their property because the value of their personal assets will be of more and more value in the, let's say, upcoming crisis, which we see coming when the state aid will stop being provided to the economies. And to conclude, again, I really like microinsurance personally, because it's a very nice thought and a very nice business model. And I'm repeating this like a bad record. I think this one is one of the rare instances of business models, if done in a fair and in a very adult way, can be a win-win-win situation for everyone. For governments and populations, it can be a win-win-win. It can be a win situation because it will lower the protection gap. For consumers, it can provide products that they need. And for insurance industry, basically, it's an opportunity to touch the clients which are currently uninsured, and basically to organically grow the insurance market globally. That's briefly from my side. Thank you very much.
Thank you very much, Sergey. As always, you're very illustrative, also with examples with camels and succinct. So you answered so many questions that I thought of, but just one short question for each of the panelists, because we just have 6 minutes more to go to finish our panel. So everybody should just respond very quickly, like let's say in 2 minutes. And the question that were raised by the public, by the audience, they were already answered in the chat. So Sergey, obviously you see the opportunity for the insurance industry in microinsurance. But in practice, if you can tell us very honestly, is the industry interested in it?
That's something what I'm trying. I try to do some research on this issue before this conference, because I was personally interested. I think it's an interesting thought. In principle, yes. I was talking with two large Slovenian insurance groups and one, let's say, one large global group present in the region. In principle, there is interest. However, I still see that the industry is, let's say, getting too comfortable. It's still too comfortable with the profits they are making on classical motor TPL insurance in the region and so on. What I lack is, let's say, a bit of, that's my impression, a bit of strategic vision in the sense that the insurers should really anticipate what will happen not next year, but in 5 years or 10 years. The margins will get lower. The loss ratios on classical insurance are getting higher and higher. And I think that the industry should do more strategic thinking in what will happen in 5 to 10 years and put these, let's say, nice thoughts into more practice. And I do believe that such events as this are really the opportunity to raise these issues.
Thank you very much, Sergey. Excellent question, excellent answer. And I would like to ask Teresa, over the past decade, many supervisors have gained experience in inclusive insurance regulation. You mentioned your presentation, the regulation tracker, and also in promoting access to insurance more broadly. But can you share some learnings that might be relevant for the CEET region?
Sure, thank you, Gorazd, for that question. And maybe I can answer this question by providing some insights or messages from an event that we organized 2 years ago, which was in the context of our 10 years anniversary. We brought together supervisors, but also other stakeholders from the insurance sector to reflect a little bit on what has been done during the last couple of years. And during this event, they came up with a couple of key, very high-level messages, but that I thought might also be relevant for the CEET region. And the first of all, what I would like to mention here is that supervisors clearly play a role in help closing the protection gap. We talked about it, and I think this is a key message here as well. Depending on the market context, they can issue supportive regulations, but they can also do other things like bringing together the relevant stakeholders and put in place the relevant infrastructure. Also, it has been proven useful in the past. We see in some countries, supervisors, beside financial stability and consumer protection, they are also responsible for market development. So they have a market development mandate. So this is also something very helpful in this context. And then another key message was kind of don't reinvent the wheel, because in the last couple of years, supervisors have tried a lot to come up with dedicated frameworks, with innovative approaches. So it's really worth looking at these examples and what has been done and what was successful and what was rather not so successful. Of course, it's important to take into consideration what are the specific market contexts, but generally, I think it is good to see what's already out there. Another point is, before start regulating, it might be good for the supervisors and regulators to get in touch with the industry to really see what are the barriers for them. Why do they feel it is difficult to offer inclusive insurance to the low-income customers? And then something that Sergey also mentioned about coordination among supervisors from different countries, but also within the sector, within also cooperate with other supervisory authorities when it comes to mobile insurance. And so there are so many other stakeholders involved that it is really important to have these open dialogues and discussions. And then, of course, see what's the impact of the changes you have implemented. So really take track of the results. And one last point, to be prepared for future developments, because we see that the market is really evolving quickly. We have so many new technologies, digitalization. So the supervisors also need to keep pace and really stay informed about these developments going on. Thank you.
Great, thank you so much. We have actually reached to the end, but there are some more really great questions that I would like to respond. So if you allow me that we take another extra 5 minutes. I have a question for Klime, which is actually a very interesting one. It is from Yaksha, and it is how can we utilize experience in different examples of regulatory requirements of mutual cooperative insurance in fostering inclusive insurance?
Okay, mutual insurance is something that really doesn't exist in our region. Also, even in the regulation, there are some obstacles, but historically, insurance actually is based on the principle of mutual insurance. And my view will be that inclusive insurance can grow in parallel with introducing a regulatory framework for mutual insurance companies. I know that Yaksha, he is doing some research on mutual insurance, and I think that we can address this as a topic and to explore furthermore and to see how the regulatory action could be in favor of building environment for mutual insurance.
Okay, great. And I have a very concrete question for Mimosa. And it is, other than the central bank, are there intermediaries in Albania? Is microinsurance a different segment in the Albanian market?
Sorry, can you repeat?
If other than the
central banks?
Yeah, other than the central bank, if there are intermediaries in Albania, and is microinsurance a different segment in the Albanian market?
In Albania, the central bank supervises the banking sector, and the financial supervisory authority supervises the insurance market and the capital markets, including the voluntary pension funds. The microinsurance regulation and supervision falls under our authority. Actually, there in the Albanian legislation, there is no definitions about the inclusive insurance. There is so it's not regulated in the law or in other regulations of the authority, but it's also not prohibited. So we allow the innovative distribution channels through internet. During the COVID, we saw that all companies in the market work towards the digitalization of the distribution channels. And so we are also responsible for the monitoring of the intermediaries. So we have the market conduct and the prudential regulation and the supervision. So we have the competent authority.
Thank you, Mimosa, for answering this. And going back to camels, Sergey, based on your camel example, how to structure remote claims process via apps or mobile phones in a smarter way?
Yeah, I mean, it really depends on the risk covered. So basically, the insurer needs to adopt the proper way of remotely assessing the risk, depending on what is covered. I know that the insurance industry has very good experience in assessing the motor hull claims via mobile phones. So yes, the use of mobile devices, but taking into consideration the risk of the nature of the subject matter insured. So the insurer, in order to avoid insurance fraud, basically the insurer needs to think that the ears of the camels can be cut off without major consequences for the camel. So that's my reply.
Okay, a great answer, and camels maybe are the point where we can conclude our panel discussion today. It was extremely interesting from my side to hear all these different perspectives from supervisory and industry side. We had a great discussion, great presentations, and I would really like to thank one more time for the presenters and the panelists for equipping us with some good knowledge for future development of insurance, inclusive insurance. Last but not least, I would just like to mention the pool. If our attendees, they can rate this session after we are done, and Teresa will launch this pool. And one more time, there are some more very interesting discussions later on today. The next one will be on digitalization, and we are very much invited to follow us over the next few days. Thank you very much, and hopefully to see you soon. I'm sorry to cut you short of coffee, but as long as it is a virtual one, I do not have a bad conscience about that. Thank you very much, and see you soon.
Okay, now it's a digital coffee break, and thanks for all panelists and for the audience. And please come back at 11:30 with the second session, which will cover the topics of climate risks and agricultural insurance. So see you shortly.